Welcome to Real Estate Investing for Women. On this show, you will learn how to create wealth through real estate the blissful way. That means with very little stress and very little time. We talk about strategies, mindset, heart set, money smarts, resources, and so much more to ensure you're able to create the success you most deeply desire. Now, here's your host, Monica Sawyer.
Today, I am so excited to welcome to the show my friend, business coach, and personal mentor, Dr. Gina Gaudio-Grace. Dr. Gina is a retired attorney and a 1991 graduate of Notre Dame Law School, where she was the lead note editor for the Notre Dame Law Review. Dr. Gina holds a PhD in entrepreneurship and business strategy, and she's a certified wealth management specialist and a licensed document preparer. Dr. Gina is also the founder of Abundance Group Trust and the co-founder of the Abundance for All Foundation. Her personal mission is to touch the lives of every person on this planet in a meaningful way. Hey there, Gina. Welcome to the show. I'm so excited to have you here today.
And I am so glad to be here, Monica. As you know, I love every opportunity to get to talk to you. And now I get to talk to your audience as well.
I know. I'm so excited to share you with them. So, ladies, I read Gina's bio, but I want to give you a little background on why we're talking today. Gina has been my business coach for several years. She understands my heart and that my heart is really about serving you. I do this show in service to you so that I can expand your possibilities, right? Help you to live a blissful life, right? What's also really interesting is that the reason that I chose Gina as my coach is because her heart is the same. Right. We were just talking before the show in the green room that, our relationships are different. Our businesses are different. Our doggies are different. Like everything in our life is, we kind of march to the beat of our own drummer, right? We're very individualistic women, right? But the other thing that makes us very similar, like two peas in a pod, she says, is our heart to help the world. And she's definitely that person. So it made sense when she was my coach because she understood my heart. I never will work with a coach that's someone that doesn't understand bliss and doesn't understand my heart. And I've been through many coaches, but Gina was one that I stuck with for years because she understood those things. And when we had conversations, I didn't have to re-explain my priorities or my values, right? Because she had this very similar ones. I feel so blessed to have her in my life. And recently, we've been talking about trusts, right? I've had people on the show before that have talked about trusts. I've actually pursued and built trusts myself, and have not really been very happy with the outcomes. Not because the companies weren't amazing in what they did, they were, and the trusts that I have perform the what they were supposed to do, but they're not giving me the full spectrum of really what I need. And so when I was talking to Gina about this once, we were just on the call as friends having a conversation. She was like, Monica, I need to tell you about this trust that I've built. And she has been working with other people in the industry who are very well known for the trust that they build. She herself is a retired attorney. So she took what other people are doing and then added her own specialty to them based on her own education as a lawyer in trust law. So she's got this amazing trust. And interestingly, ladies, she and I were having a hard time recording. I never record on Saturdays, ladies. That's my day off. But the only day I could get Gina on the phone to record was on a Saturday. But I had this like niggling instinct that somebody out there needs to hear this. And like I say, I'm here in service to you, ladies. I've had this happen before where I record a show. I was going to release it in 3 months and I push it up 2 weeks because I feel inside someone out there is needing to hear it. Like I get this intuitive sense. Anyways, so I had this intuitive sense and I texted Gina and I was like, we've got to do this before the end of the year. Someone out there needs to hear this. So for any of you that are thinking, Monica, that was for me, I'm just saying, here I am on Saturday recording for you. I love you.
And that's why I pushed it to a Saturday. I'm like, when you told me that you had that instinct and I know your instincts, I'm like, okay, I'm wiping whatever I got. I can do it on Saturday. So here we are.
Here we are doing this for you guys on a day that neither one of us would ever record. Of course, we love hanging out with each other, so that makes it a lot nicer.
Yeah, we do.
Yeah. So anyway, so after that very long intro, here is Gina, and we're going to talk about trust. Yay! I'm totally excited. So, and the other thing is that I am in the process of creating this trust myself, ladies. So I have been hearing about this trust from Gina for about a year. I am very, very conservative. You know this, ladies. So, of course, I have like 10,000 questions. I've listened to all of our conversations many times so that it sinks into my brain, because this is not something that I understand. It's not intuitive. And you can do that too. That's the nice thing about a recording is you can listen to it. And if the first time it doesn't make any sense, the second time you'll pick up a little bit more. Listen to it 10 times, right? Because this isn't stuff that normally we talk about. So you can listen to it over and over and over again. You don't have to feel dumb about it, asking questions, right? But we are also going to be doing a webinar for those of you that want to talk to Gina personally. We're going to be doing a webinar on the 20th of October, 2022 from 1 to 2:30 Pacific time. So 1 to 2:30 p.m. Pacific time. So you can come and listen to, talk to her live and listen to this a few times before that. If you are coming in later and you miss that date, the webinar is going to be recorded. You go to the URL that I'm going to give you and you can listen to it again. So there's a lot of information. Sorry, but Gina, we're going to turn it over to you. Tell us about this amazing trust.
Well, and before I do, let me just say the whole reason I went to law school in the first place, teaching is not what I do, it's who I am. And in the 3rd grade, I went and did the research to find out, how could I be a high paid teacher? Because I saw all my teachers who had second jobs, sometimes as garbage men. And I'm like, that's not for me, but I got to be a teacher. So that's why I went to law school. Law school professors made more money than any other kind of teacher. Had I known that being a coach and mentor and having a business like the one that I have now with trusts, where I teach all day, every day, would pay as well as it does and serve people as well as it does, I probably never would have gone to law school in the first place.
But I don't know that you would have created this kind of trust if you hadn't gone to law school. That's probably
true.
Right?
That is probably
I think that
true.
In life, every step of the way turns us into who we are today.
It really does. And it pulls all of me together. I also have a PhD in business and entrepreneurship, and that came into play with the trusts as well. So everything I have done for probably the last 40 years all got pulled together with the trusts.
Yeah, I love that. So
I wish I could say this is something that even I learned in law school, but it's not.
Well, actually, I want to interrupt you just a second before we launch into this, because I really want to hear that story. Could we start by just saying what exactly this trust does, so ladies know if they're even interested in listening to the conversation?
How about we start with what is a trust, and then I'll answer that specific question.
That sounds perfect. And then we can come back. Please forgive me for cutting you off, Gina.
No problem. So what is a trust in the first place? A trust is set up for usually just avoiding estate taxes and probate taxes. It's a way of taking the legal parts of ownership. There's equitable title, there's beneficial interest, and dividing them among multiple people. And because it's divided among multiple people, that's why it's able to offer benefits. Trusts got started way back in the 1600s in England with one of the kings who wanted to protect his wealth. And that's when we got spendthrift trusts and trusts in general. Fast forward a few hundred years, the early 1800s, our old money families like the Kennedys, the Carnegies, the Gettys, the Rockefellers, they all started amassing the fortunes that their families have today, and they wanted protection. So what did they do? They set up trusts. Now, back in the 1800s, we didn't have an Internal Revenue Service. We didn't have an Internal Revenue Code. That came back in around 1913, 1914. So fast forward 100 years, and those families now have big money, lots of assets in their trusts, and they're being fully protected. But now The government needs a treasury, so they're setting up the Internal Revenue Service and the Internal Revenue Code. Well, these families didn't want their trusts taxed to death. And lucky for them, they had friends and family in high places in Washington that were part of writing the very first Internal Revenue Code. So, since the inception of the tax code in the early 1900s, there has been a provision that gives tax mitigation benefits to our trust. I doubt it's ever going to be taken out of the tax code because there's too many big, high-powered people that make use of it with their trusts. So with this trust, it's a very novel trust structure. For most people who have even heard of a trust, their context is usually a living trust. So a living trust is what's called a grantor trust. It's typically something governed by state statute. State statute prescribes exactly what it needs to do, how it needs to work, and it provides one benefit. You get to avoid probate taxes when you die. But that's about all it does. In a grantor trust, which is what that kind of trust is, you give assets to the trust, but it doesn't really protect the assets at all. So for families that have lots of wealth or are growing their wealth actively, you need something more than just a living trust. I was first introduced to a similar trust structure, although still a little different, back in 2004. Back then, my business was coaching, mentoring, and joint venture brokering. The woman that introduced me to it has since retired, and she had something she called an intellectual property trust. It made any income derived from intellectual property 100% tax deferred. And I'm like, really? You can do that? Now, I took 2.5 years of trust law in law school. That's 2 years longer than any other required course of action in law school. You'd think I would have known that, but I didn't.
And this, and I just want to interrupt it by saying, when you go out to trust lawyers, they each specialize. So a lot of times they won't have heard some of this other stuff. And that's what I found as I've been doing research, right? Is you go to a trust lawyer and they're like, we haven't heard about this, or you can't do this, right? Until they actually do their own more research. And so that's so relevant, right? Because you hadn't heard about it. A lot of people won't have heard about it.
Well, 18 years I've been researching and studying trusts. And let me tell you, on this particular trust structure, conservatively, I have something in excess of 6,000 hours worth of research. Wow. It's not a small amount of research. And I don't expect any of my clients to go out and do even 6 hours of research, right? That's why they have me.
Right.
So when I found this trust in 2004, it worked phenomenally well. Until 2010, when the person that introduced me to it decided to retire, and it was structured in a way that was required to renew annually with a new fee annually. And when she retired, she didn't give us a way to continue renewing. And all my back taxes that had been deferred came due instantaneously.
Oh my gosh.
It was horrible. I mean, really horrible. So I went on a mission in 2010 to find another trust that could continue my tax deferral the way that I had it. I had not been able to find it until about 4 or 5 years ago. And when I found similar trusts, but not intellectual property trusts, every time I looked at them, I found another issue. So down the rabbit hole I'd go doing more research, which is what led me to the unique structure that we have today. It combines 7 or 8 different kinds of trusts into a singular trust so that it can provide ironclad asset protection. And when I say ironclad, I really mean ironclad. No judgments, liens, levies, and often even divorce is going to reach assets held in this type of a trust. It's just not. Not going to explain why right now, but we'll get into it a little later. Second big benefit is tax mitigation. For real estate investors, OMG. So first, under Section 643 of the tax code, any capital gains income, the capital gains taxes are completely and totally eliminated, not just deferred. Second, any passive income, which for real estate investors is rent and lease income. That's passive income. It is 100% tax deferred in perpetuity. Now, if we have entrepreneurs who have active business income, which you would have from a brick and mortar business, whether you're a dentist, a chiropractor, a doctor, a car wash, whatever,
Or
it
even an
creates
online business, right?
there you go.
Mm-hmm.
Then you usually have active business income. Using a multiple trust structure that I like to call the trifecta package, we can even find ways of getting rid of the taxes on the active business income legally, completely legally. So, tax mitigation is the second really large benefit. And the third one, and to me, the singular most important one, is helping to pass wealth down for generations. This is not a trust that dies when you die or when you and your spouse dies. This is a multi-generational trust. It is going to be here from one generation to the next generation to the next generation and so on. We don't have crystal balls, so I can't tell you exactly how many years that is. But until 21 years after the death of the last heir to the last beneficiary, the trust continues to exist. At the time that it terminates, everyone's been gone for 21 years. So at that time, whatever remained in the trust, usually the IRS seizes it, sells it, and uses it to satisfy all the back taxes for all those years. But for people like us who really want to make a difference in the world, what we're able to do because of this unique structure is gigantic, because we're keeping the wealth in the trust so that we've got that much more to do good with.
Mm-hmm. And you even structure that in the trifecta as part of the way that you do things, right? Because you do a family foundation
Absolutely.
in there too. Sorry, ladies, I'm jumping ahead, but that was part of what excited me so much is that in her trifecta, she's got the personal trust, the business trust, and a personal foundation.
Private family foundation
That's right, to help do more good in the world. So we'll
that
talk a
is
little bit more.
a 501c3 tax exempt organization. So
Yeah.
using those three trusts together, I know it sounds like I'm bragging, but it blows my mind all that it can do for both you and your family and the heirs that you haven't even met because they're not even born yet. And
Right.
even the whole world, given the foundation being a part of the mix.
Yeah.
So
I
I'm
love
very
that.
blessed. This was something that I think you'll be okay with me saying this. It really was divinely guided. This is not something that I just figured out. The universe and energy led me to this.
Mhm.
This, I cannot take credit for it just myself. It would be so wrong to do that.
Yeah. So, Gina, there was a story you were going to tell before we talked about the benefits, but I just want to recap the three big benefits are really in like a couple of sentences. What are the three big benefits?
First one is the iron-clad asset protection. No creditors are going to reach this through judgments, liens, levies. I even have two clients that were able to protect properties from eminent domain, one in Arkansas, one in Louisiana.
Wow.
Second big benefit is the massive tax mitigation.
Okay.
With the trifecta package, especially, we can sit down at the beginning of the year, have a conversation, and I can ask, how much do you want to pay on taxes this year? And regardless of what the answer is, the strategy using the three trusts together, we can come up to that exact number.
And
And
that's all
then,
that's true for the tax mitigation is for 1030 like capital gains, passive income, and active income for
and
all
you'll
three
never
of
have to
those.
do a 1031 exchange ever again.
Yeah, interesting. Okay, yeah, I was about to slip up and say that. And then what was the third benefit?
The third big benefit is transferring wealth to future
So
generations
legacy.
and
Yes.
doing good in the world.
Okay, perfect. Good. So, ladies, I just wanted to let you know those are the top three things that we're talking about today. If this is interesting to you, please do stay tuned, right? Who's it not interested to, right? Isn't it just cool? But anyways, so I wanted to make sure the ladies got to hear that, Gina. I'm sorry I cut you off earlier. You were heading into a
Quite all
story.
right.
Do you want to do that?
Sure. So back in school, I didn't learn about any of this at all. In law school, you take one semester of trust law. That's it. And I was very interested in trusts, especially for businesses. So I took 2 extra years of trust law. No, I didn't get to learn about it then either. Had the woman not brought this to me in 2004 with the intellectual property trust, I don't know that I would have ended up here today. But the more I learn about trusts, the more excited it gets me. And every year, Notre Dame is really different. Every year, this is the 49th year this year. In October, they put a symposium on, and it's the Trust and Taxation Symposium.
Mm.
I've known about that 30 years ago when I was in law school, but even in that symposium, they didn't talk about what you can do with this trust structure. They did finally for the first time last year in the 48th annual Trusts and Taxation Symposium. So, guys, don't be like, why didn't I hear about this? I'm telling you, even lawyers aren't going to have heard about this. It came from this unique journey that I have been on for so many years.
So, Gina, my question as you tell this story is you can't just like poof, make up a trust, can you? Like, how does that even happen that you can create this individual, unique trust kind of, out of your learnings? I thought that a trust was a thing that was created by the IRS. There's structure and all of this other stuff around it. How do you just create it,
So, there are two kinds of trusts. There are statutory trusts, and then there are trusts that are contractual trusts.
Mm-hmm.
What we're talking about today is a contractual trust, not a statutory trust.
Mm-hmm.
So, in a contractual trust, it has to follow the rules of contract law. So, where do we get the rules of contract law? The Uniform Commercial Code. That's been adopted in all 50 states. So, when I first started down the path of writing this trust and creating it, I started with looking at the Uniform Commercial Code to make sure we were going to meet all of contract law requirements. Then I took what's been done in the past through other contractual trusts, and I kind of combined 7 or 8 of them into one instrument. The rules are governed by things like the Uniform Trust Code. We have one. It's been adopted in almost every state. We also have something called the Uniform Principal and Income Act. It's been adopted in better than 40 states. Uniform Principal and Income Act governs accounting principles for what's called a complex trust. It's called fiduciary accounting.
And this is in the tax code, yes?
This is not in the tax code.
Oh,
this is separate from the tax code.
Interesting. Okay.
But in the tax code, it says when it comes to what's called a complex trust, and I'll give you the definition in a second, that it is governed for tax purposes by a combination of the trust instrument itself. That's first and foremost. Second, local law, which is the Uniform Principal and Income Act. And third, by the tax code, which is very strange, right? Who would have thought that something other than the tax code would control federal taxes?
That is so strange.
I am here to tell you, if you want to look it up, go find on the IRS website the 1041 tax return form. That's the kind of form that a complex trust would file. Scroll to page 2. On page 2, it starts with Schedule A. The middle is Schedule B. Read line 8. Line 8 says, enter accounting income for the tax year as dictated by the trust instrument and local law, right on a federal tax form.
Interesting.
So as I realized all of these things, I'm like, oh my goodness. So I have a contract that just has to follow contract law that for other principles has to follow the trust instrument and local law. And so pulling it all together was not as difficult as you might think, because I've been writing contracts for 30 plus years.
Mm-hmm.
So,
and it's all supported. Also, I know when you and I started talking about it, you sent me the whole IRS code regarding trust.
I sure did.
Yeah,
absolutely.
So it's all supported. The whole trust, everything, all of this is completely legal according to the IRS, right?
And my partner is a practicing attorney out of Burbank, California. Mm. He's an estate planning attorney.
Mhm.
So I would go to him when I had questions about estate planning stuff to
Mhm.
make sure that we were complying with all the rules there. But it works in all 50 states. The way this trust is structured, it is treated as a common law trust. What that means is it works in any country whose legal system follows the common law. The UK, many countries in Europe, many countries in South America, all over the world, more than 70% of our legal systems are based on common law. So this
Mm.
trust gives you flexibility, even if you want to be living abroad because of that.
Interesting. Okay. One of the
Where a
questions,
living trust wouldn't work that way, just so you know.
right. That's definitely an American thing. Absolutely.
Absolutely.
Yeah. So, one of the questions that I asked you back then is when you're looking at the IRS code, the laws are so old, like everything, right? It's all written
They
up like it
are.
was 1980, 1972, 19, like way back then. And my concern is, what if it changes? Like, then am I going to get caught in this whirlwind or trap by the IRS when they change the rules, right?
So, as I said when I told you the story about our old money families here in America, Section 643 of the tax code, which is what gives us the tax mitigation power that the trust has, it has been in place since the very first tax code was written. Now, fast forward to today. In 2021, when Vice President Harris and President Biden took office in April, they have to disclose their tax returns for the first time once they take office. Also, at the same time, Dr. Fauci, who eventually came on to head the COVID task force, he had to do the same thing. All newcomers to Washington have to do it. If you look at their publicly available tax returns, you will see that they received income from their tax advantaged trusts that take advantage of 643 of the Internal Revenue Code. So many people in Washington are making use of trusts that use this part of the tax code. I can't imagine any of them being willing to make changes to it because it's going to hurt them, not just hurt us.
Well, and the current administration, they're doing that, but this is true for every, almost, I don't know for sure, but we can look it up. Almost every single administration, would you say?
I have gone back to the mid 90s. I haven't gone any further back than that. But
Yeah.
every administration since the mid 90s, it is 100% true for.
Yeah. So it's not just the current, right? It's the way that
Correct.
they do business, right? In
Yes,
Washington. So go ahead and
absolutely.
continue.
And there is something that governs how tax attorneys practice law and what they have to do in front of the tax bar. It's governed by something called Circular 230. It's put out by the IRS. In Circular 230, there is a section that says members of the tax bar, tax attorneys, are allowed to write written opinion letters that their tax paying clients can rely on. Now, it's got a very prescribed format that has to be followed, has to include certain details. But if a taxpayer, meaning all of us, was to rely on a written opinion letter from the member of the tax bar, and the IRS later came back and said, nope, that letter is wrong, they are not allowed to assess penalties at all. So, for my clients, we have a team of tax attorneys who are all separate practitioners in their own practice. They can't be part of Abundance Group Trust, but we can make introductions to them for you. And if you really want the best protection I could give you from something happening down the road, we'll set up a time for you to talk to one of the tax attorneys so you can get a written opinion letter. And it's, I don't want to say it this way, but it's like a get out of jail free card, right?
Mhm.
In Monopoly, because it really will protect you.
And there's one other piece with those partners I want you to mention.
And every one of the attorneys that work with our clients, they not only have the normal malpractice insurance, they also have errors and omissions coverage. And the reason being, and that's $1 million per occurrence, each one of them
Occurrence.
are, yes, Each of them is required to carry that, or they're not working with our clients. That way, God forbid something did happen and the IRS says, nope, the letter is wrong. And now you owe back taxes plus interest. It might not be the equivalent of malpractice, so you can't recover against the attorney's malpractice insurance, but the errors and omissions policy would certainly cover you for up to $1 million per occurrence. Okay. And that just is good peace of mind.
Yeah. Okay. So we got all of that stuff that I'm like, these are the things that make me nervous. Right. So we've got that all
until you heard about that, you weren't even willing to have a more in-depth conversation with me.
That's true. And ladies, you need to hear that. Like, Gina is a close friend of mine. I trust her. I've trusted her with my business. I've trusted her with my life in so many cases, and vice versa. Right. But I was not willing to continue any kind of conversation about a trust unless I knew it was fully legal and I was fully protected in case something came up. Right.
Yeah.
So,
yep. And I didn't push you. I knew at some point when the time was right, we would have that conversation. And
exactly.
I'm so excited that we finally did.
Yeah, me too. So now that we've gotten all that out of the way so people can open up, let's actually talk about the trust.
My favorite.
Yay. Yes.
So let me talk about it this way first. I promised to tell you what a complex trust was. You're going to laugh, but a complex trust, there's two kinds of trusts, a simple trust and a complex trust. It doesn't mean that it's complicated. It's a legal term. And the legal definition of a complex trust is any trust that is not a simple trust. I hate lawyers who do that, but my gosh, come on. So what is a simple trust? A simple trust is a trust that must distribute 100% of its income at least annually. So a living trust is a great example of a simple trust. For those who understand LLCs that are single member LLCs, it's a pass-through entity, right? You don't have to file a separate tax return for a single member LLC. It's taxed on your 1040 return. A simple trust works the exact same way. It's a pass-through trust because it's distributing 100% of its income at least annually. So that income gets taxed on whoever received the money, called the beneficiary, whoever that person is, on their 1040 return. In a complex trust, the trust is not required to distribute ever until it terminates. So with a complex trust, especially with ours, it has income. The income gets added to the corpus of the trust. Corpus is Latin for the body. And all that means is income comes in, it gets put in an account in the name of the trust. Now that it's in the name of the trust, it's not required to get distributed. So instead, it can be invested. It can be used to pay for lots and lots of things. The list of what it can't pay for is shorter than the list of what it can pay for. There's only 3 things it cannot pay for, and that is food, fun, and fashion, meaning clothing. It can pay for health, so medical expenses. It can pay for educational expenses. I went from Gina Gaudio-Grace to Dr. Gina Gaudio-Grace when I set up my trust and realized I can use tax-deferred dollars to go back to school and get my PhD. So I did. Mm-hmm. That was so much fun. So education, it can also pay for maintenance and support. So for your children, it can pay for food and clothing until they turn 21. It can pay for their education from preschool on up through graduate school and postgraduate school. Now, the other really cool thing about it is because the trust is not required to distribute ever until termination, it becomes an exempt asset for purposes of financial aid forms. So if your children are going to private school, you do not tell any of the financial aid forms about the income or assets held in this trust. It is the only kind of trust that is totally exempt on financial aid. And let me tell you what that does before I tell you in other ways it's an exempt asset. So on a financial aid form, when you don't report it, you're going to look like a pauper on paper. I have one family, was one of the first ones I experienced this with, and it was so incredible. Their son wanted to go to my alma mater, Notre Dame. They had about a $20 million net worth. Notre Dame's tuition that year was about $74,000. So
Wow.
we set up the trust. Now it's time to file for financial aid forms, and they've got practically nothing and practically no income. So Notre Dame reduced his tuition from 74,000 to 15,000, and he got need-based money, not student loans that had to be repaid, but grants to cover the 15,000 plus room and board plus books. That's what happens when everything's in the trust and there's no income, no assets to report outside of the trust.
Wow.
It's also an exempt asset when it comes to Medicare and Medicaid. So you set this up, everything gets sold to the trust, not gifted to the trust. Once it's in the trust, if you ever needed long-term care, you go into long-term care and you instantly qualify for Medicaid because it is an exempt asset with no look-back period. So in so many ways, this is just incredible from what it can do for helping with educational expenses for your children, grandchildren, great-grandchildren, to what it can do with things like long-term care.
And then talk to us about that's awesome, right? Especially for like me, I'm a sandwich generation, right? I'm taking
Yes.
care of elderly parents, and then there's also kids going to college and that sort of thing. So that's amazing on both of those sides. But what happens for me in the middle? What can I use it for in my own life?
Oh my goodness, pretty much everything, right?
Mm-hmm.
Just not for food, fun, and fashion. And if we set up that trifecta package we talked about with the personal trust, the business trust, the foundation, your foundation is so incredible because as a founder and trustee within the foundation can pay for fringe benefits. So, one of the fun things that the trust cannot pay for is vacations,
Mm-hmm.
but the foundation can pay for family retreats to solidify the family unit up to once per quarter.
Mm.
If you want to do more vacations than that, like Monica, who loves to travel all over the place as often as she can, then in between family retreats, you can go on what are called site visits. Maybe Monica decides she wants to go to Bali. She goes to Bali. She goes and looks for some good work that her foundation can do while she's there. That is a legitimate use of the foundation's money, and therefore, a foundation can pay for the whole trip,
And actually,
which
that's
is amazing.
legitimate. Yeah. And
Totally
that's
legit.
legitimate. I do that, right? Like I
I know you
actually
do.
go to Bali and look at what we can do to help. So,
Absolutely.
yeah.
So, when we combine them together, the list of what you can't pay for is way shorter than the list of what you can pay for. Pretty
Mm-hmm.
much anything. It's going to own all of your assets through a sale to the trust. So let's say you've got your primary residence. You're going to sell that to the trust. Now, the trust doesn't have money when you do it. So it's going to give you a specialized form of promissory note called a demand note. That demand note's going to have a small interest rate based on the AFR tables that the IRS sets. Currently, it's 3.5%. So if we took the value of all of the assets at basis that you sell to the trust and put that all into a promissory note, anytime you need money to cover food, fun, or fashion, you take it out by reducing the value of that note. 3.5% is the current tax rate for the interest. So 3.5% is what's going to get attributed to interest income on a 1099 INT. The balance of it's all just repayment of principal on your note. So it
So
pays for
you don't get taxed on that.
no, not at all because it's repayment of principal.
Yeah.
So it's really incredible what the trust can do. You literally live your life and run your business out of the trusts or the
Isn't that
foundation.
hard? Like more paperwork, more complication. Isn't that hard?
So you would think that because we didn't learn about this stuff in school. But I am here to tell you 30 to 45 days after you set it up, you're going to wake up one morning and feel like you just had the biggest aha moment of your life. It's a paradigm shift. From that moment forward, you're going to realize it's actually easier than what it is outside of the trust. everything is simpler. You don't have to scrounge for deductions to get your tax bill down at the end of the year. It's all going to have tax deferral or elimination of taxes, so you don't have to worry about it. I think it actually keeps people more honest on their tax return, believe it or not, because you don't have to scrounge for those deductions. It doesn't need to be deducted because it's tax deferred or tax eliminated, which is awesome. So, yes, at the beginning, it will feel hard, but hang in there, get through the training that we provide and the hand holding that comes with it, and it will simplify everything, especially business.
Okay. Talk to us a little bit about the training, because that's really valuable. This is one of those things that I have to confess, with the trust that I personally have built already. They committed to lots of training, and I pay $50 a month for all of this stuff. And I feel like I never got trained. I don't have access to people.
I hate to hear that.
And it's $50 a month. I'm still paying that, right? So those are a couple of things actually. Like, is there maintenance fees? Sorry, I'm totally going off on a tangent, but are there maintenance fees? And then talk to us a little bit about the training.
So I'm going to start with the second question first.
Okay.
Remember, how I started this business was because of what happened to me in 2010 when I lost my tax deferral. So you don't ever have to pay after the initial investment if you choose not to. The trust is yours. It won't ever get invalidated. You continue to use it for generations to come with my blessings. No extra payments on it at all. Yes, it needs a tax return, but any entity you set up is going to need a tax return every year anyway, but that's it. So, training. Every trust has a training podcast, anywhere from 6 to 8 hours in length. It's given to you in video, audio, and written format. So, whatever style you have for learning best, you've got it right there for you. Each lesson will come with assignments. So, at each step, you listen to the training, you go off and do the homework, you come back and do the next step. We also include things like we have calls 3 days a week. There are Q&A calls. On Wednesdays and Fridays at noon Eastern, it deals with the personal trust. On Mondays, one Monday's the business trust, the next Monday's the foundation. My commitment to you guys is every one of those calls will be me leading it. I don't ever leave that up to other people on my team. In addition to all of that, those are all kept in podcasts too, written, video, and audio format for all of those calls. We also include a trust advisor. I have 17 trust advisors on my team. All of them started out as trust clients and then became trust advisors. So these are not people who just learned about the trust and I'm paying them to do something. They came to me wanting to work with clients because they love the trust so much in their own lives. That changes everything for me. And I'm so blessed to have had that happen. So you get your own trust advisor. That trust advisor is there to help you in any way, shape, or form that you might need over the course of the next 12 months. And if that's not enough, you get a tax advisor. We include with the investment the first year's tax return and consulting with the tax advisor throughout the next 12 months. Now, at the end of the year, if you want to continue receiving all of those different pieces of support, it's $2,000 a year for the personal trust, $1,500 for the business trust, and the foundation, that's a gift from me to you. So we are here to support our clients. My mission is to touch the life of every person on this planet in a meaningful way. I can't do it on my own. It's by working with my clients, helping them to more meaningfully touch the lives that they come into contact with, that together that can be our reality. So I am here to support you as much or as little as you would like.
Thank you for that. What happens if they don't pay the extra 2,000 or 1,500 or whatever, and then something comes up with a trust, like something maybe goes wrong, or there are questions, or what happens then? Do they get any kind of support?
They still have access to the support desk where they can ask a question. If the answer, like something went wrong and the trust is getting sued for some reason, we may need to come in and help oversee it. If it's something that would jeopardize the trust itself, obviously we're going to do that without having you pay us a bunch of money to do it. But if it's something else that you just need support on, we can either do something on an hourly basis or let you come back into support packages later on.
Okay.
So whatever serves you best.
Okay.
I am always accessible through email and text. Every client has both my email address and my text.
Mm-hmm.
I have an entire succession plan in place. At some point in time, not anytime soon, I'm going to either pass away or decide to retire or who knows what, right? My nephew, Ben, who I helped raise, I have no children. Ben is 32 years old. He is our fulfillment director, and he will be taking over for me when I am gone. In addition to Ben, we have an endowment that we've created at the University of Notre Dame that will be paying for 3 scholarships each year, one for a law student, one for an MBA student, one for either a master's of accounting or a master's of finance. Those students who receive the scholarship will be required to work with us for 1 summer throughout their education. It's a way for us to get to know them and them to get to know us. Ben will be pulling in one from each discipline when he takes over. And when all of them decide to retire, they will pull in 3 more to take over so that your heirs will have the same level of support that you had. And I would not be doing my job of really serving our clients had we not found that solution to make that happen. We even have trainings already ready in a podcast for successors. So far, none of our clients have passed away, so their successors haven't had to take over. But successors are welcome to come into the live calls now. They can go through trainings now, whatever serves you best. And when you are gone, the training's ready for them.
So interesting. I've got so many questions, Gina, as always.
I know.
And we're out of time.
And that's why I said, let's do a webinar together.
Let's definitely do that. So, ladies, if this is intriguing to you, there's a couple of things that we have that I want to offer you for more information. Like I said, I've been talking to Gina about this probably for about 18 months. I'm very slow. I'm always about like nothing happens till you take action, right? But here I am, like a year and a half later.
It's because you take your commitment to your audience so seriously, Monica. I can say that honestly as your business coach and mentor. Until you have 100% comfort with something, you're not going to bring it to your people. And I commend you for that and encourage it.
Thank you. Thank you. Yes, my heart for my ladies is definitely like the thing that drives me.
Absolutely.
And in my own business, ladies, I know that you feel this too, right? Like you don't want to bring something to your family that you don't feel totally confident about. Like I didn't want to bring this to my husband until I felt like I could really talk about it. And it's like driving a car. I don't need to know all the mechanics about how a car works to drive it, but I need to know enough to take good care of it and make a sales pitch to my husband about why I want this particular car, like my Tesla, for instance, right? So I need to know enough. And for me, I think I need to know a little bit more. I'm a little bit of like not a brainiac as in smart, but brainiac as in I need a lot of information before I make big decisions like this. Yeah. So ladies, if you want more information, the first thing that I would recommend is please listen to this show a few times. You may have thought, oh, there's little Popeye. Her little dog came on the screen. So sweet. But listen to this show. And maybe you feel like you got everything out of it. I always get a little extra when I listen to a show over and over and over again. So if you can stand it, I would listen to this one a few times, just so you can kind of hear. When I say open up, I don't mean like, I have any interest at all in influencing you. But I think for me, getting a lot of that initial stuff out of the way allowed me to move forward to get more information. And so if that's what you're needing or wanting, that's an opportunity. Just listen to the show a few more times. We've also got some other opportunities that we want to present to you. Gina has graciously, you've heard how much time she's spending on the trust and the training. So she doesn't have a lot of extra time. And then on that other extra time, she's talking to clients, right? All you guys that call, she's going to be talking to you, right? So she has a lot of appointments. So her time is very, very, very valuable, as is all of our time. But she has very graciously offered to do a webinar for us. And this is just for my community. She's not doing, so she holds friends and family webinars, or she's held one. It's now in the can, I think.
Yes.
And that's for like all of the people that she's sort of affiliated with. But because she and I have a special relationship, she's offering an opportunity just for my ladies, which I feel so grateful for. Thank you for that.
You are so welcome.
Yeah. And so we've got a date where we're going to get together and talk to you ladies on October 20th, which is a Thursday, October 2022, from 1 to 2:30 p.m. Pacific time. So that's 1 to 2:30 p.m. Pacific time. Check your, your time zone, and you can adjust for that. But anyway, so that's going to be a time. And I will say this about Gina and myself: we will stay on as long as the questions go. I know she's had webinars that have lasted 2 hours, whatever, but we want to make sure that your questions are answered. This is a really, really important topic for wealth building, and wealth sustainability, and for legacies. I think what's really fascinating about this is that those of us, like, I consider myself wealthy. I'm very, very grateful to have what I've had, to have the success that I've had, to been able to grow my own wealth. But we don't hear about this stuff. I think in another one of Gina's webinars, she said she has a billionaire client who had never heard about this stuff. But this is how the educated wealthy, and I'm not talking educated like in college, I'm talking about wealthy that get educated on their money. This is the sort of thing that they do to continue to build their wealth and to pass wealth down to organizations and causes that they believe in, their families, and so forth. So you're getting a very special education here on something that certainly people in the middle class don't hear about. Right?
Think about the Bill and Melinda Gates Foundation, and Jeff Bezos and his foundation, and Warren Buffett's foundation. Their foundations go hand in hand with their trusts. Right. And how did they get to the point that they're at? The trusts were the secret sauce.
Right. Because the more money that you're able to hold on to, just the law of compounding, the more that you hold on to, the more that can grow, which gives you more opportunity to do good in the world, do good for your families, right? Family first, and then do good in the world. So it makes it easier. You don't have to struggle so hard to keep making that money because you're not giving as much of it away. So I know that there's a lot of emotional reactions to this by people that don't understand the way that it works. And that's why I'm here to educate on that. And I want to give you an opportunity to know about something that you're not going to really learn anywhere else. I didn't know about it. Most of the people that I know about it don't know about it. Most of the lawyers that I talk to, trust lawyers, don't know about it, right? So it's a gift that Gina brought this to me, and I wanted to make sure that I give you ladies the opportunity to take advantage of it if it feels right and good to you. So please come join us for our live webinar. You can ask Gina questions. That again is on October 20th, 2022, from 1 to 2:30 p.m. Pacific time. If you're coming in later, right, you're listening to this in a replay, that is also going to have a replay. So you can go to the same URL that I'm about to give you, and then you can get the replay. Here's the URL to go to: blissfulinvestor.com/trust webinar. So blissfulinvestor.com/trust webinar. When you go there, there's going to be a few things that you get to see. I was introduced to this whole concept by a podcast that Gina did with somebody else named Cassie. She had a huge stock capital gain that she was dealing with and was searching for some answers. And she had a huge amount of experience with trust. So she was able to ask really, really good questions. And the webinar, or that particular podcast, was to die for, like really, really good. So
47 minutes, but watch it. It's amazing.
It's really good. And it's audio only. So anyway, so when you go to this URL, on that page, it's going to ask you for, to log in so they know who you are. And then with the thank you page, you're going to have a couple of things. You're going to have Cassie's podcast. You're going to have Cassie's Q&A webinar. So you're going to get all of that information, right? And then you'll get either the login information for our webinar that's coming up, or if you're coming in later, you'll get the replay of our webinar. And then you'll also get information on how to contact Gina so you can move forward, right?
Absolutely.
So those are the kinds of things that you're going to get if you go to this URL, which is blissfulinvestor.com/trust webinar. So we're trying to give you as much information as possible. Don't feel rushed, right? Take your time, learn, give yourself the time to listen and learn and ask questions in your own mind, and then see if you can find those answers in the information that we're giving you. And then when you're ready, set up some time with Gina. This has taken me a while. Don't worry if it takes you a while. However, I will say there are some of you out there, we're coming out towards the end of the year. You have had huge capital gains in 2022, and you're trying to figure out what to do. That's why I had Gina on now so that we can, those of you that need her can take advantage of her services before the end of the year. Because in a lot of this stuff for the mitigation of taxes, you have to do it in the year that you're filing the taxes for. You can't do this by April 15th next year, right? So did you want to comment a little more on that, Gina?
Yes, especially with the foundation being a part of this. You have until the end of the year to donate money to your foundation. You can donate up to 30% of your adjusted gross income. For most clients, that means a reduction of their tax bracket. So it can make as much as a 35 to 37% reduction of what you pay in taxes this year, but only if you do it before the end of the year. So it's crucial to Monica and I that we really get this information into your hands ASAP, so that if you need that kind of help this year, you'll have it.
That's right.
And you won't have to worry about it from now on.
Exactly. That's why we're recording on a Saturday, ladies.
Exactly.
We wanted to get this out to you while you could still think about it. And like October, I don't want you dealing with this during the holidays necessarily, unless that's your choice. But at least I'm giving you the information a little bit sooner so that you can take advantage of it. So that's what we've got going on. Gina, but thank you so much for your time on a Saturday afternoon. I love hanging out with you, but thank you for your time.
Thank you, Monica, for having me. I am so looking forward to continuing the conversation and working with your ladies. As you know, you and I have had our hearts joined in helping these women for so long now. Yeah. It'll be wonderful to actually interact with them directly.
Yeah, I'm looking forward to that too. To the ladies getting to meet you and me getting to share you. It's going to be fun.
It is.
And for those of you that have missed, like you're in January or February when you're listening to this, it's not the end of the world, right? You've got many more years ahead of you of earnings and taxes and all of those things. So still, go get the information and get the seeds in your mind so that you can move forward. It's something, whether you take advantage of it or not, ladies, part of what wealthy people do is we learn. We're in constant learning because there are things that come up in life and you think, oh, I know about that because, right? I heard this once, and you know where your resources are to go back and find that information. I'm trying to train you ladies into becoming those wealthy women, right? The independence, but also the mindset. So much of our mindset isn't just, this sort of uplifting, which we have to do, right? But part of bliss is really having the resources inside of you and the knowledge, the constant learning that helps you to grow your life in the way that you want. Does that make sense?
Sure does.
Yeah. So, okay, good. I'll stop talking. We're going to get off with our afternoon. I hope, ladies, this was super helpful for you. And I'm looking forward to seeing those of you that can join us on the 20th. Yay. Remember to go to blissfulinvestor.com/trust webinar. And I will see you then. And I'll see you next week in the next show. All righty. I appreciate you, ladies. We'll talk soon. Oh, remember, goals. I'm so excited. Goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. Love you. Bye.
I hope you enjoyed today's show. If you'd like to find out more about how to become a blissful millionaire, go to blissfulinvestor.com. See you next time.